Welcome to the Stock Market Podcast. This is your host, Jack. Thank you for tuning in. You can find a video here every Monday and Friday. To get started, we're going to start talking about earnings week. This week, huge week. We have this week and next, we have thousands of companies reporting their income. I think if you're paying attention to some industries tied to Amazon, tied to Apple, such as like UPS, for example, they smoked expectations. Amazon and UPS, they're pretty tight. They're complementary services, complementary businesses. That is what I based my decision off of, that Amazon was going to do exceptionally well because UPS's earnings were before. I put, some calls and plays on them. They did exceptionally well. If we're talking about Apple, I had a call on them as well. Alibaba's kind of jumping up and down. There's a lot of friction with US and China. I think looking to next week, we're going to have a huge week in a good way. We have Congress coming out with the HEALS Act, the CARES Act 2.0. We have the information out on that now. It looks like that's going to cover us for the rest of the year. The stock market is responding well to that. It looks like there's going to be another stimulus check. And it looks like they're working to get that passed right now. So we can look forward to that. Looks like the dollar is also weaker. That's going to drive up short-term results. So a couple companies are coming out next week with earnings. We're going to see what that amounts to. But I think overall, earnings aren't as bad, or even in some instances better. So you can start placing some calls, some long-term calls. I think we're starting to get out of this recession depression that we're having caused by the illness. So looking at a safer call that I would place, that I would recommend, I'd do a long-term call somewhere in November. Strike price 250 for Alibaba. They really only have to go up a few dollars and you're going to be safe. If they shoot up to 265, you're looking at a pretty decent return. Even if they go up a little bit, you're looking at between a 3 to 20% return on your calls. So, the more you put in, the more you get out. Just know your risks, know your limits. And overall, I hope we're enjoying the Friday, because next week's going to be really good. We're going to take our break now, pop your drink, do a little day drinking, enjoy your weekend, hit up your Arby's, get your beef and cheddars. Do whatever you got to do, relax, because I think big gains are on the way. And remember, scared money don't make money. So you got to really go all in and, do your research. Look at what companies are coming up, complementary businesses. Like I said, with Amazon and UPS, you're going to have some information right in front of you, and you're going to have to use that, at your own will. And like I said, coming out of the illness, it looks like a lot of people are out and about. Face masks are required now. People are back in stores. People are ordering back online. I think we're having better employment news, and people are going to start going back to work here shortly. So I think it's just going to be a bunch of good news, really good earnings with all the money that's been pumped into the economy by the government. I think there's going to be exceptional returns. So I think consumer optimism should be in an all-time high. I don't think you should be fearful. If there was a dip, there would have already been a dip. We were shut down for, months on end. Nothing like that had already happened. We were already in a bear's market. We're now in a bull market, baby. Let's take advantage of that, and let's start making some money together. Tesla, we're taking a look at Tesla. Like I said in the previous podcast we did, they're starting to expand. They're starting to grow as a company. I think there's potential for huge gains there. They are really not just an automotive manufacturer. They really are a tech company. And as you can see, any vehicle on the road, it might have lane assist. It might have, a couple cool gadgets. I don't know if you've ever been in a Tesla, but they really do drive themselves, on the highway, exceptionally well. And they're leaps and bounds ahead of Google in terms of, miles driven and the software provided. And their battery technology really is great. I think the price is a little bit more attractive right now. But if you're looking for maybe a 50-50 split, if you want to have some high returns, you could go, You could go in on Tesla and Amazon. Amazon's strike price was just increased to about $4,000 over the next year. They're at $3,200 as we're speaking right now. There's a lot of room for growth. So some long-term calls could be done. However, the Greeks on that are not that great. If you're not familiar with the Greeks, we're going to cover that in another section, and I'm going to bring in someone to explain that a little bit better. But, that aside, I don't know if I would do Amazon for a call. I might rather pick up some shares if you have the money to do that or not. They are, a fairly expensive stock. And on the other hand, Tesla, I think Tesla could hit, potentially $18, $19, $2,000 before their next earnings report, because they really are growing. They have the momentum. They have a very loyal ownership. There's not a huge sell-off whenever there's good or bad news. People are just kind of in it for the long run. They believe in the concept. They believe in Elon Musk. They believe that he's going to take people to Mars, that he's going to make the best car ever, that he's going to make the best batteries ever. There's really nothing that they don't think he can't do. So they believe in him. Whether or not you believe in Tesla, you have Tesla fanboys, you have people that hate Tesla. I personally, I think Tesla could be a good purchase. They're less volatile now. They follow the market. I might buy a couple shares of them, see what they do in the future. That being said, though, I would warn some investors about potential upcoming delisting of Chinese stocks. I am aware that Hong Kong has relisted some of those companies. So some are safe, but a lot of them do not use the same credentials. I believe Alibaba is a safer company. They are very large, fairly open with their financials. However, that cannot be said about every company. So I know a lot of people that have made a lot of money and lost a lot of money investing in Chinese stocks. A good example would be Luckin Coffee. They just significantly dropped because they were giving fraudulent information. So take a look out for that and make sure that you're not going to get burned, even if they do look attractive. Mitigate your risk on that. And make sure to check out the next episode. We are going to go over the Greeks, which is going to include Delta, Theta, Rho, Gamma, Vega, and we're going to go over what all of that means. We're going to give you some tools available that we use that are going to help you invest. And so make sure to tune in on that. That's going to drop on Monday. We post here every Monday through Friday. Check back in and make sure to like and subscribe to this video.